You're listening to Indications by the Conference Board.
Hello, welcome to Indications, a podcast series from the Conference Board. I'm Frank Steemer, Senior Economist at the Conference Board, and in today's special episode, I am moderating the discussion and presentation of recent research on wage gaps by race, ethnicity, and gender, current trends and opportunities for change in the US. Wage gaps, which we define as the differences in pay between different demographic groups, has been an important topic for labor market followers, compensation experts, professionals in diversity and inclusion, and policymakers. Contributing to an already large body of research on the topic, the Conference Board has conducted new research focused on wage gaps by race, ethnicity, and also gender. Before we delve into the topic, however, let me introduce my two guests. First, we have Kat Levanon, head of our Labor Markets Institute and a regular contributor in Forbes. And then we also have Laura Sabatini, principal researcher at the Conference Board's Human Capital Center, where she focuses on diversity and inclusion. Kat and Laura, thank you for joining me today.
Thank you for inviting me, Frank.
Okay, great to have you both here on our show today. So wage gaps by race, ethnicity, and gender remain large. While large educational attainment differences are an important contributor to already large pay gaps, they remain even when comparing workers with similar educational background. In this podcast, we examine how wage gaps by race, ethnicity, gender in the United States have increased in the past decade, especially with respect to Black workers, despite increased awareness to wage disparities and an effort to address them. The goal of our new research is to focus on describing some of these recent trends, finding the causes of wage gaps, and discuss what companies can do to decrease these pay gaps. We focus on specific elements that are impacting to these widening gaps, such as occupational labor market segmentation, which we define as the wage differentials as a result of people working in different jobs with different pay. So with that introduction, let me turn to my guests. Laura, to start with you, before we delve into our research, could you tell us why you believe this topic is important and specifically why it is important for businesses?
Yes, thank you, Frank. Yes, so in the report, we analyze these gaps and also we discuss the implications for organizations, businesses, and society. So we know that, of course, wage gaps and inequities are, important factors to improve economic outcomes and improve society generally. But it's also clear from, look at the research, including the work that we've done here, that it can also improve and help businesses and work environments in many ways. So the one aspect that many often talk about, has to do mainly with reputation and risk aversion. So many companies may want to keep hiring practices that are equitable and fair compensations by aligning with what many investors, customers, and consumers and other stakeholders for the organization are actually looking for in a company. So equity is important because it improves reputation. It also prevents companies from, being sued, and that's, more the risk-averse element of it. So that's oftentimes what businesses think about when they do a pay equity analysis or look at their pay structures. But the one thing that I wanted to add is that it's not only just about pay. Actually, pay equity is connected with many other aspects of the workforce, to the culture, processes, human capital, processes, and talent. And so what companies may not always realize is that by addressing, identifying, and trying to prevent and fix pay disparities within their companies, they're not only benefiting those like women or people of color that might be underpaid, but also they're improving cultures, they're creating more efficient work practices, more efficient pay and compensation practices, and so on. So I think that it's important to also think about how pay equity is affecting other parts of work.
Thank you, Laura. That's very interesting. Then to you, Kat, could you give us an overview of the trends in wage gaps by race, ethnicity, and gender? And could you tell us which race, ethnic, gender group is earning the most, what the percent difference is with other groups, and how this has changed over the last decade?
Sure, Frank. So there are very large wage gaps between non-Hispanic white men, which is kind of in our research is the reference group, and essentially every other demographic group. And in some cases, those gaps are very large. They are larger for people with a BA than for people without a BA, surprisingly. But if we look, for example, at just the people, workers with a bachelor degree, even after controlling for various demographic features, Hispanic women are making 30% less than white non-Hispanic men with the same education and other demographic features. So that's still a very large gap. Black women also have a very large gap, over 25%. Black men have a larger gap, much larger gap than Hispanic men, and it's still close to 25%. I would say the unusual or the exception here are Asian men. They have actually an advantage over white non-Hispanic men. They are making more among people with a BA. Now, it's not only that those gaps are very large, they have also increased over the past decade. So instead of dropping, despite all the efforts that society and companies are putting into this, the gaps between different racial ethnic groups is growing over the past decade.
That's very interesting, Kat. And so there are big pay gaps across these demographic groups, but then there are also pay gaps that have been increasing over the past decade. So could you explain why we have some of these gaps? So what role play characteristics such as age, education, geography, occupation, and industry in these wage gaps?
So probably the most important gap, portion of the gap is due to educational gaps. So, for example, the share of people with a BA among white people is much higher than for Black and Hispanic people, whereas Asian people have a higher share of BA than white people. So that's probably the most important determinant. But even when, as I mentioned earlier, when we account for the differences in education and other demographic groups, there are still very large gaps. And we can break those gaps into two main components. One is the underrepresentation in high-paying occupations and industries. So within, even among people with a BA, it turns out that white and Asian people tend to be more represented in high-paying occupation and industries, like so in terms of occupation. So it's management and medical doctors and tech jobs in tech industry. So they when you get to those types of jobs, you're much more likely to be paid more. But even for people with the same education and the same occupation and the same industry, there are still what we call the unexplained gap, which could still be easily double digit for certain demographic groups. And that could be a result of anything that essentially is not captured in our model. So it could be, even though, for example, if we count two people with a BA as having the same education, so that's true at a formal sense, but it could be that one person over their lifetime had a higher quality education than someone else, and that we are unable to capture. It could also be a result of differences in social and professional networks that give some groups more opportunities than other. And it could also be biases in hiring, in promotions, in retention that provide an advantage to some groups over others.
Okay, thank you, Kat. So I see there's a wide variety of indicators, but it seems that education is very important, but also occupation and industry. If pay is different in a certain occupation, then just simply because of that, you get widening wage gaps if these high-paying industries keep on growing over time, but have a certain, in this case, where we see the widening wage gap, a certain group white men working in these occupations, and that is why some of these gaps continue to widen. Then with that, so just before we continue our discussion, we're going to take a quick break for some quick announcements from the conference board.
Interested in this content? You can find this and much more at our conference board website, www.conference-board.org. Or, even better, contact our membership team and your company can enjoy the benefits of our in-depth research around the economy, environmental, social, and governance issues, public policy, marketing and communications, and human capital. As a member of the conference board, you will be able to have full access to all of our cutting-edge research, leading indicators, benchmarking, and data services, in addition to webcasts and podcasts such as the one you are enjoying now.
We're back. This is Indications, and we were talking about wage gaps by race, ethnicity, and gender. Gad, thank you again for the great overview of these wage gaps and some of the reasons why they exist. I'm now turning to Laura to hear about her perspective from an HR and D&I angle. Laura, why do you think that despite the increased awareness, wage gaps continue to widen? And what do you make of some of the remaining wage gaps that cannot be explained by our model?
Thank you, Frank. Well, I think that Gad has already brought up a lot of important issues, and we'll discuss a bit more when we talk about recommendations. But that's exactly it, that this is such a complex issue that there's a lot of unexplained factors that can contribute to these, even everything else being equal. So I don't really have a lot to add to the issue about, there's, of course, the bias, the processes, as well as the fact that when you look at education is an example, the experiences with education are very different, and access to networks is very different. The other thing that I would mention is also, even when you have people within the same organization, sometimes the role that they have or the influence they have and the pay that they have within organizations are different, right? So let me give you an example. You can have an executive team of leaders in a tech companies, for example, and within those leaders, you are going to have leaders who are profit and loss responsibilities that typically have more influence and are higher paid. And then you have executive leaders like HR, for example, or other roles that are considered staff. And so even with the same title and same background, the pay is already different in those roles. So, and the other, thought that is related also to the analysis that we did in this research is also looking at industry. So you can have people within an industry, let's say, for example, the tech industry, where people have tech roles and then may not have non-tech roles within the same industry. And so again, there's all these different factors that contribute to what's difficult to measure. Now, the second part of the question is about the increase in these gaps. I think that it's very difficult, to pinpoint, and I'm curious what the two of you think from economics perspective, but I do wonder if it has to do with pay increasing in some industries. And so maybe with the increase in pay, that might be some increases in this gap because some industries' salaries are larger. And I'm curious to hear whether you examine that in your analysis. But that's the one factor. But I do think that this is also something that when we talk about recommendations might be helpful for companies themselves to consider. So not only looking at their metrics now, but look at their internal metrics are changing over time to help identify maybe some of the contributors to these changes over time.
Okay, thank you, Laura. So I think Gad is going to talk about one of the very important reasons why some of these wage gaps have been widening over time. Just before I turn to him, I just wanted to hear from you if you have some specific recommendations for companies. Did you say HR or other business leaders, this is what you should do or should be looking?
Yes, of course. And so I'll focus on, there's 4 sort of sets of recommendations that we make in our report. And I'm just going to go over those really quickly, without getting too much details because this is a short conversation, but just to give listeners a sense of how we're looking at this. So the first set of recommendations has to do with monitoring metrics. And we know, and we are hearing that many companies now are doing pay audits and looking at their pay structure and comparing and making sure there's no gaps. And so that's a very proactive way of looking specifically at pay. And many companies are actually trying, if they see gaps, they're trying to fix them. So that's sort of an approach that is, helps with the immediate what's happening at a certain point in an organization. But that's definitely not the only metrics to look at. It's important to look at factors that may have led to these gaps. And so we recommend really looking beyond just pay and thinking about all the different factors that may contribute to this pay inequities. So where are people of color and women in your organizations? What's their tenure? How, where are they concentrated in lower paid jobs? For example, as I mentioned, are they more likely to be entry level or more likely to be roles that are lower paid within the companies and are white men or Hispanic white men or comparison groups, in this case, are they more likely to be concentrated in higher paid jobs? So kind of figuring out those metrics can be very helpful. And we recommend for organizations to do that in a way that is especially meaningful for them. So, we can give broader categories, but each company is going to be different in terms of their roles, whether you're a healthcare, tech companies, and so on. So you have to sort of identify who the higher paid positions, what they are, and that will give you a sense of how to look at the data. The other set of recommendation is about looking, using the data to inform your diversity and inclusion practices and try to reduce the labor market segmentation internal to your company. So we know that from your analysis that there's a segmentation, in across industries. And if you look at the US overall, but look, do you have segmentation within your company? And examples that I provided earlier about, being in HR versus, executive profit and loss responsibilities, for example. Do you see women and people of color being concentrated in some roles? And then what are the reasons for that? And we provide a lot of different examples of human capital practices that companies can implement to try to decrease this segmentation so that there's not only more women and Black and Hispanic workers in decision-making and higher paid roles, but also that there's more diversified the pipeline at the entry level. And we also recommend doing that when it comes to looking at talent mobility. So it's not just where people are at one point in time, but your analysis shows that this gap is increasing. So how does the data look over time? Are you more likely to have maybe diverse groups at the entry level, and then maybe many of them leave or they don't advance and they remain stalled at one level? So all those different analyses can be helpful to figure out a way to prevent pay gaps from happening or rehappening if you've already identified some and fixed. And again, I'm not going to have time to go over all of this in details, but I recommend, people to read our report because we provide more recommendations there. The last but not least element of our recommendations has to do with how organizations interact and work with the communities where they operate to help think about the gaps in a way that is not just internal, but larger. And so you mentioned education, for example, and I think even within college education, there's disparities that are already happening when people enter into college. So are there opportunities to partner with K-12 or other educational institutions to help build this pipeline for roles that tend to be higher paid, whether it's engineering and technology, or working with schools to improve the education so that they can get better paid roles, or also, improving the networks of some schools so that people that normally may not get the opportunity to work at companies, they have access to those companies. So the recommendations is also to engage with schools, and nonprofits organizations that do work in this field to really improve access to jobs and opportunities and careers. These are all things that can really help organizations address the gap, not only internally, but also beyond, in the communities where they operate their organizations.
Okay, Laura, I think that were some very helpful tips and thoughts about this topic. Let me also mention that the upcoming report that you were talking about, we are hopefully publishing that in May. So keep an eye out for that report to get some more details on what Laura was just talking about. So Gert, now in this last part of the podcast, I would like to focus on one specific element of the labor market segmentation story. And that is, what role has the tech industry played in widening racial wage gaps and then specifically pay gaps between white and black workers?
Sure. So in our work, we kind of looked at what we call top earners. So every year we looked at the top 20% in the wage distribution. And we looked at it at the beginning of the past decade and the end of the last decade. And we saw some very interesting trends. So there are certain groups, certain occupations and industries that had a much larger share of the top earners at the end of the decade compared to the beginning of the decade. And it turned out that many of those groups are related to the tech, either tech companies or tech workers. So, for example, software developers, they became much larger share of the top earners at the end of the decade. Also, industries like computer and data services, internet publishing and web search, electronic shopping, software publishing, data processing services, all of those are groups that gain share, that became more frequent in the end of the decade and then in the beginning. And it turns out that in those industries or occupations that are related to tech, there is a strong underrepresentation of black workers. So just to give you an example, if we find that there are over 6% of all top earners are black workers, among software publishing industries, black people represent only 2% of top earners, and they are just 4% for computer services. They are 3.5% for electronic shopping companies, 3.3% for software developers. So they are much less likely to be in those types of jobs. And so kind of there is this big part of the labor market that became much more represented in among top earners, but black people were not really part of that trend. So that kind of put them in a disadvantage and contributed to the fact that wage gaps over the past decade between white and black workers has actually increased.
Okay, yeah, I see that is actually what is an interesting story, but it then can also explain why we have seen some of these pay gaps widen over the last decade. Then to focus on one other element of this story about the tech industry, is there also a geographical component? We know, for example, that in California, the tech sector is, of course, very strong.
Yeah, I think geography is a very important part of it. Not the only part of it. I think there are reasons for underrepresentation of black workers in tech that has nothing to do with geography, but certainly the geographical distribution doesn't help. And by that, I mean, where a lot of the action is in the tech industry in the recent decade, and the biggest growth have been in especially four metro areas, San Francisco, San Jose, Seattle, and Austin, Texas, as well as in some other mostly Western metro areas. And the thing is that there are relatively few black people in those areas to begin with. So, you know, in theory, black people can move to those areas and get the jobs there. But in reality, we see that that doesn't happen a lot. And in a metro area, we are much more likely to see strong black presentation representation in the tech industry if there are a lot of black people in that area to begin with. So that's, I think, an important reason for the underrepresentation of black people in the fastest growing parts of tech. But at the same time, I think the events of the past year provide an opportunity to perhaps close this gap. And that opportunity has to do with remote work. If tech companies in California or Seattle or Austin, if they want to hire more black people, but they find it hard because they are not in their locations, they can hire them where they do live. And we do see a lot of top earners among black tech workers in places like Atlanta and Washington, D.C. So those workers do exist, and through remote hiring, tech companies in other places can reach those workers and employ them.
Thank you, Gerd. I think that is still an interesting insight, and there may then be some opportunity for change over the next decade, or at least let's hope that there will be some change and that remote hiring can indeed decrease some of these pay gaps.
And I would add to that, Frank, if I may, that it's not just that the remote work, there is also seems to be a change, and seems that as a result of the events of the past year, around the killing of George Floyd and the protests around it, that the topic of racial equality became a much more important topic, much higher on the agenda of companies and CEOs. So I think the combination of that and the shift to remote work may actually create a turning point. Let's hope.
Yeah, okay, great. Thank you, Gerd, for adding that. I have to say that is all the time we have for today. I've been speaking with Gerd Lebanon and Laura Sabatini from the Conference Board, discussing the widening wage gaps for race, ethnicity, and gender, and what steps companies can take. Gerd and Laura, thanks again for joining me. And thanks to all of you for listening. Please tune in to more episodes from Indications, where you can also find our monthly labor market roundup, in which we discuss the most recent jobs report from the Bureau of Labor Statistics. Don't forget to subscribe to the Indications podcast series from the Conference Board through your favorite podcast app. Thanks again for listening. I'm Frank Stiemers with the Conference Board.
This has been Indications from the Conference Board.